Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, and Happy New Year to each and every one of you guys. So first trading day of the new year. It is January 2nd. We're going to cover the technicals, the data, what's moving in the markets today. We'll look at stocks, crypto, commodities, and beyond. All right, so first and foremost, new year, we are seeing the futures up a little bit here this morning. And again, getting that little initial like, okay, new year, new buying opportunity, money flow coming into 401ks to start the year. That generally is normal. But we have to remember, we were looking at markets that were up on Tuesday before the holiday. They were up pre-market and they ended lower. We saw that institutional selling come out robustly and push the markets to the downside. So as much as the markets are up pre-market right now, are we going to see it hold? Let's take a look right now and see what we have going on the charts. This is the S&P or SPY pre-market. And you can see again, this is where we closed on Tuesday right there. This was the after hours on Tuesday. This is the morning this morning at 4 in the morning right here. A little bit of a pop and then sideways consolidation. Now, for those of you chartists out there, what type of pattern was that pre-market? Classic bull flag, right? Sideways consolidation, and then it leads to that pop. Now, what's interesting here is pre-market, we did see this pop, and then it kind of has a rounded top and starting to make a bearish pattern here. So again, like I said, in general, the first of the new month, the first of the new year, you have people that can now put more money into their retirement funds. So it generally is on a basis of normality, on history, on data points, you get an up day on that first day of the new trading year. But like I said, we've seen weird action lately, even on days where the markets generally float up. So let's keep an eye on what happens today. Do markets end green? They are up substantially right now. But again, let's watch and see if there's volume that comes in that first 30 minutes to an hour of trading today. All right, here's your daily chart of the S&P 500. What I want to bring your attention to is what's called a head and shoulders pattern. It is a bearish pattern on the charts. And again, it's bearish once the neckline breaks, right? So let's look at the neckline. Where's the neckline? The neckline essentially takes the armpit here and connects it right here, and that becomes your neckline right through there. The head and shoulders, for those of you that maybe can't see it very clearly, here's your left shoulder, your head, and your right shoulder. Now, what you're watching for is if this breaks right here. If you trade below that area, which is right around 58.30, 58.25, you actually can calculate your measured move target. How do you calculate your measured move? You take your highest point of the head, drop a plumb line straight down to the neckline. You take that distance and you replicate that distance down. It'll probably be down in the 5,600 range as a target. But remember, as of now, this is a preliminary pattern. It has not triggered because price has not broken this neckline here. So again, I'm giving you kind of the game plan for what could happen if we violate that level. As of now, we have not, and right now the markets are set to open up a little bit right around here. And again, that's okay. By the way, let's talk about how a head and shoulders pattern is negated, right? That's just as important to know when it fails versus just when it's successful. Here's your head and shoulders pattern. The way you know if a head and shoulders pattern fails, if ever price were to rally up and take out the high of a head, it would then be negated. That pattern would no longer exist. Think about it from a human perspective, right? If I stand right in front of here, shoulder, shoulder, head, you're not going to, as much as I try, I can't get my shoulder to be above my head. Therefore, again, that wouldn't be a head and shoulder pattern anymore. Very simple to think about it like that, but that would be something that you would pay attention to. Another thing to note here, technically speaking, once that head and shoulders pattern breaks, right? So let's say it trades down here. Here's your neckline, so you're back below. If at some point you trade back and actually confirm back above the neckline, it is also negated, right? So again, you have to be aware of this stuff. So many people are so focused on, oh, that's a bearish chart, and then they just think, okay, well, no matter what happens, it means it's going down. Not always. We always have to be flexible as technicians to understand that every single day we get a new candle, the probabilities could be shifting one way or the other. Once we get back above and confirm, the probabilities actually flip to either a 50-50 at that point or even favoring further upside with a failed pattern to to the downside. All right, so again, these are little things that I always want to impress upon you in the new year. Remember, verified investing is all about data, charts, probabilities, but also education. I want you guys to walk away each and every day from the game plan, from trading the close, from any of our other things that we post on our website with a little bit more knowledge on how to be technical, which, let's be fair, that's what the institutions are using, folks. All right, they're not using their gut, they're not using their biases, they're literally putting billions of dollars on positions where it's like you're in the casino, right? If someone said, hey, if you put this chunk of money on red, you have an 80% chance of winning. Guess what? They're always going to be putting it on red because they know 8 out of 10 times they can win. That's the same thing we as retail investors must get to. Not this emotional where the institutions make us think something's going to go to the moon or the mainstream media is pumping this new narrative and we all jump on at the highs of the chart and then wonder why we all lose money when it falls and collapses. Data, probabilities, verified investing. That's what it's about. All right. Let's go to the charts here. Let's zoom out on the S&P 500. Let's draw our trend lines here real quick. A cool trend line to take note of is this one right here. This one connects this high to this high to this high and that last high. So that's an interesting one to note. And then we also have secondary trend lines as well. The big one that I'm kind of following here is this one. So this is a one that we've followed here recently. And remember, this is one where it connects the August low through this secondary pivot low, and then we broke below it and we retraced and got rejected into year end off of that level. So notice how these two trend lines are coexisting and starting to get closer and closer. They're going to join forces, and the nice thing about that is it's going to give us a very defined level of whether the bearishness continues or gets negated. So for instance, if for some reason we trade above these two levels, well, guess what? Now you've blown through both resistance areas and the market is free to go up a significant amount more. I don't think that will happen, but as a good chartist, we always have to be ready for something that might be unexpected. Now, what is my most likely outcome of this chart? Bear with me as I get my arrows. I think we'll get a small bounce like this, a lower high again, and then I think we get our next big breakdown, which would be that head and shoulders neckline break, and we start to move towards that $5,600 target right down here. All right, going to a couple big movers on the day. Tesla is on watch. It continues to break down outside of its upsloping channel. Today, pre-market, we are seeing Tesla, just got a nasty pop. All right, so guys, wow, that's a big drop. If I was at my trading desk, I'd probably be buying up a little bit right here. Big drop on Tesla. All right, so this is what's going on, and I was watching for this number. The number was deliveries. So they were going to announce their deliveries this morning. Needless to say, they've already announced them, and that's why you're getting this big drop. So obviously deliveries probably were not up to par. But wow, let's talk about levels. I was just going to go into how we might get a small bounce, but then a bigger drop. Your target price is $360. Pivot high right through here. That's your next target price. There should be a big bounce at that level. Going back to the pre-market, we got down to 383 here and are now bouncing back up. Again, that would be your big swing trade level. As a day trader, there will be levels. For instance, if I'm just going down here, I actually see a level at 370. There might be a little pivot at actually 389, which we already pierced, but there are some little day tradable levels here, which of course we'll be doing in the live day trading, Apex live day trading room today. But the swing trade, and listen, swing trade is a relative term. I want to be clear. This might just be a 1 or 2 day bounce level, but I would expect right around 360, 358 right here to get some sort of bounce. Maybe we even hit that today for all I know. Unity Software is a big mover this morning. That surprised me because I didn't know that number would be out right now in real time with Tesla. But the key is Unity Software. Guess who talked about it a little bit? Roaring Kitty, Keith Gill. And so sure enough, he still has his power. He has his, it's funny, you almost have like a printing press. He almost has a printing press. He can talk about something, he can buy something and then talk about it, and then all of a sudden it's up 20, 30, 40%. Amazing to have that power in the world of finance, especially when it comes to positions that you like and be able to mention. But if we go back to the charts right here, you can see what Unity Software has done. Big pop from basically closing around 2250 on Tuesday, rallying all the way up to 26.5. It has pulled back, but that is on watch here. Double top here for today on Unity would be a resistance at 2865. That has not been hit yet pre-market, and that would be a short-term double top. There's also a small gap fill at around 28.90. So right between those 28.65 to 28.90, there should be significant resistance on Unity Software today. Keep in mind, we're looking at Celsius, WBA, Dollar General. All of these charts are beaten down in the year of 2024, and I do favor them. If there's going to be rallies, I think these are the ones we want to focus on, which are generally profitable, like Celsius is profitable, right? Walgreens is profitable. Dollar General is profitable. Now, they've struggled. There's no doubt about it. It's not like these companies don't have headwinds, but the point being is that they've been beaten down so much due to tax loss selling that they may see a bounce back in the new year just on the lack of selling, right? So if you're an investor in a year where the Dow or the S&P or the NASDAQ were up 24, 25, 26%, you have probably had a lot of gains. And so if you were holding a Celsius, for instance, into year end, you're like, oh, let me just sell this to lower my tax burden. Well, guess what? Now, if anyone was going to sell, they probably sold then. It gives kind of a little bit more of an opportunity for those stocks to have the January effect, which is the bounce back of beaten down plays. So watch those names there. Next up, let's take a look at Bitcoin here. Bitcoin having a nice little move up. Let's take a look over to the big board here. We'll talk about some levels. So Bitcoin, again, folks, is holding up. It is getting a bounce today. Notice how the bounce is coinciding with the NASDAQ, the S&P, trading up nicely here in the morning session. And again, one of the things to keep in mind is, does it matter if Bitcoin trades here? Does it matter if it trades here? Does it matter if it trades here? The answer is it doesn't matter on a technical basis. Why? Well, suffice it to say is that right now, on this basis, the only thing for a technician, a true technician, not someone who's ruled by emotion, but a true technician is this line and this line. It's the only thing we care about. So Bitcoin could go like this for all we know. Doesn't matter. Does it break here? Okay, if it does, it gets its next leg up. That next leg up would be this upsloping trend line, which is around 115,000. It is upsloping, so in a week, 2 weeks, it might be 117, 118,000. We don't know yet. We have to see if price does do that. We have to start looking and seeing, okay, where does that potentially take us to? If it breaks here, you start your drop down to about 75 to 73,000. All right, so again, my point is that a lot of investors, you'll see Bitcoin up today on social media. They'll be talking, oh, here it goes. Here's its next big move. If it goes down, you'll see the bears come out. Oh, here it goes. It's going to break down. Be agnostic in that way, meaning that don't let the hype, either side of the move, don't let it influence you. We want to be, especially in this new year, make that resolution that you're going to be void of emotion when it comes to investing and trading and just follow the levels. That's all that we need to do. We know our level here, and we know our level here. That's it. That's all that matters. All right, so again, I stress that because I know emotion tends to run high, especially in crypto, but really in everything when it comes to money, investing, we all have that emotion. Always remember, the biggest thing I learned and the biggest thing that helped me be a great investor and trader was that when there was something that was running where I started to feel that emotion, like, oh my goodness, I need to jump on board, I would always remember, and I started to think about this over the years, after years and years of trading, wait a minute, if I miss that trade, is that the last trade that ever is going to be in this whole entire world? And I'm going to be like, oh, I missed that trade? No, because there's always, like, tomorrow there'll be a new trade. The next day there's a new trade. I literally miss tens, if not hundreds of trades a day. It's all about the ones I catch. And so if you miss one, okay, it's like a car racing by. There's another car coming right behind it. Now let's try to catch that one. And if we use our technicals and discipline, we find the probability that is going to let us have that 80%, let's say, success rate on that trade, and that's our goal. It's never going to be 100%. I mean, listen, there's always someone out there that says, oh, well, Gareth got that one call wrong. I got a lot more than one call wrong, let's be fair, over the course of my career. But it's, again, can you win a high percentage of the time? That's what will make you into that millionaire or beyond in this game. You're not going to win every time. It's what's your winning rate over the course of your trading career. All right, let's go to a couple other charts here, folks, after I got done with my New Year's sermon right there. Oil, you guys, here's one that I got right. I even remember after I made this call. Let's go over to the big board here. Someone was like, oh, well, Gareth just went bullish, but it came down a couple days. That's okay, because remember, Here's your breakout, didn't confirm, and confirmed. What does probability tell me? Probability tells me this is now a major support because it's confirmed, price has confirmed above that. Comes down, hammers on it a bunch of days. Okay, it didn't break it, it didn't confirm below, it didn't negate it, and if it did, then your bias flips. That's just the being a trader. What does it do? Oh, look, it did go up. And where did it go? Right to first target on oil. So first target on oil is now being kissed at around $73 a barrel. I've said it all last week. I'll say it again. This level, while it is resistance, it just doesn't have the reward versus the risk where I feel comfortable enough to short it. We're not extended that much, right? So what I'm going to do is I'm going to try to be patient. I'm going to let it go up maybe 75. There's another level here. I don't have it on the chart. And then 77 to 78 here. This area is where I will start to accumulate a short. At that point, price will be much more extended. So my reward on a pullback is much more attractive, right? So it's not just about the setup, right? You could have a chart, by the way, and this is another little good point, where we could have a chart that the setup is a 90% win rate. And, you know, if you said that to anyone, they'd be like, well, duh, why wouldn't you take a 90%? I mean, you win literally 9 out of every 10 times. Why wouldn't you take that trade? Well, what if I told you if you win, you make $1. If you lose $100. Would you still take that? And then most of us all of a sudden would say, wait a minute. Wait, if I win, I only make $1. If I lose 100. I wouldn't take that trade. Right? And so my point is, it's not just purely, when it comes to making trade decisions, it's not just purely the levels and the probabilities, but you have to take it one step further into analyzing your risk versus reward. And that really is where it comes down to. And once you do those two things, now you can make the judgment, right? So you could say, okay, well, 90% success rate trade on this setup, 10-factor setup, whatever it is. And I'm going to make $5 if I make money, and I'll lose $5 if I... Okay, but at 90% win rate, that makes sense. Even an even win to even loss. Maybe even making $4 to lose 5 on that 1 time out of 10 makes sense. But again, there's always going to be a point where you start saying, wait, maybe I don't want to do that if the win rate or the win gain is not high enough. All right, let's get to some of these other charts here. Gold today is pushing up just a little bit here. So gold, again, is having a decent little push. The positive on gold is it's still pretty much holding this upsloping area here, this parallel. So that is a positive. What I also like is gold today is actually breaking above this previous high. Now, it hasn't negated the bearish move, right? I mean, this is still bearish inside bar action, right? I mean, you could still make a case for that. This is still choppy inside bar, but it's at least a step in the right direction, and it's still holding that big parallel down upsloping trend line right here. So good move on gold. I still don't have a great read on it, but again, if you ask me where gold is, let's say in the next month, I'm unsure. If you ask me where it is by the end of 2025, I do think it's above 3,000 an ounce. So again, it's the shorter term that it's a little bit more murky. The longer term, I still favor some significant upside on gold. Now silver, a little trickier. It is getting a little bit of a bounce here. I think eventually, again, as I've drawn in here, eventually we come down here. You have the bearish pattern. We then bounced, and we're coming down. We're getting a bounce today. I'll show you the one level I'm looking at here in the short term to keep an eye on. Very clearly, there's this area. So right now, the 28.80 is support. It's this low here. Let me get rid of that line right through there. If that breaks, that should be your next catalyst to a drop down to that 27.50, 27 area on the chart. All right, we looked at oil, we looked at gold, silver, Bitcoin. Let's quickly touch base on natural gas, which had that one wacky day last week. And really, it has quieted down, had that big pop, then big reversal, and it's still net positive. But again, it has kind of calmed down here. All right, I just want to go back and check on Tesla here. Ooh, Tesla's coming back in now. So this will be something that we're, no doubt, folks, we're going to focus on Tesla in the live day trading room, which I'm headed over to right now to get started. Again, awesome end of year with great winners there. Don't forget, if you're not a day trader, we have so many amazing services, whether it's smart money stocks, smart money crypto, smart money commodities. Those are all swing trade services with 2 videos every single day of me analyzing just for members those charts. And then we also have Earnings Trader. Earnings season's coming up. That's an amazing service. And Trader's Edge, which is a crypto swing trading and day trading service as well. And then the $20 a month for a lot of you that maybe can't afford $100, $150 a month, totally understandable. Trade ATI, Advanced Trader Insights. I give 3 trades every week. There's a trade of the day. There's cycles report, insider buying and selling report, and it's $20 a month. Best value, honestly, on the website, and it's supposed to be a gateway to let you get some involvement in verified investing. But listen, you guys just tuning in every day means the world to me. Let's go kick ass in 2025. Let's go crush it. Thank you so much for tuning in. Let's do it up. Take care, guys.